Last week, the China Securities Regulatory Commission announced a penalty decision on its official website. It is stated that a small investor named Zhang Ming used a small amount of money to manipulate the market for 2 consecutive years and obtained high returns. Then he was found and sanctioned. By reading the judgment, I learned that the process of his market manipulation is mainly divided into 2 stages: planning and execution. How did he plan it? First, he created a set of trust accounts. This is in preparation for arbitrage trading in different markets. Second, find interconnected markets. Third, initiate a convertible escrow agreement. This links the 2 markets. You can buy in one market and sell in another market. These only need to be done once. Then comes the execution phase. Pick out the right variety first. He found a fund called LOF, which met the above conditions. Specifically, look for stocks with little or no trading volume in a single day. Easy to operate. After preparing the tools and materials, start manipulating the market. On the first day, he activated his trust account group to buy enough stocks in the OTC market. That's what the right hand is doing in the video. The next day, buy all the stocks publicly on the secondary market. What the left hand does in the video. He can raise the stock price as high as possible with very little money because the stock has very little trading volume. Day 3, repeat what you did on day 2. Day 4, repeat. But he will sell the position on his left hand and start selling the position on his right hand. On the 5th day, clear all left-hand positions and sell as many right-hand positions as possible. As long as someone else issues a buy order, he will sell. Zhang Ming even lowered the selling order price to the lowest level in order to attract cost spreaders and freeloaders to take over. Eventually, all positions are cleared. This is his entire crime process, which lasted for 5 trading days or 7 days. Although he was in a slight deficit on his left-hand side, he made a substantial profit on his right-hand side. After aggregation, each manipulation process gave the trust account group a profit of approximately 15%. He did the same thing 33 times in a year and a half. The success rate is 100%. Profit 500%. Until regulated. Leaving behind a dilapidated mess. One might ask,
if someone else had intervened against him earlier in the process, he would have failed.
Yes, but there are a lot of issues involved. The stocks he manipulated were complicated, and most people didn't understand them at all, such as OTC, custody transfer agreements, and arbitrage techniques. Quote, at the same time, the market structure was fragile, and even if someone saw it, they couldn't take action.
Was it done by someone within the company?
I support this guess. This is reasonable. A fund staff member took advantage of his position to manipulate the market in violation of regulations. You can query by symbol in the chart if you are interested. At this point, I would like to ask everyone, the chart of GameStop is very consistent with what Zhang Ming did. Is it a kind of market manipulation? I would say that GameStop's stock market performance is a form of market manipulation, but so far it has not been investigated and prosecuted. Some people deny this statement. Is that so? So, how to define a market manipulation? To avoid confusion, market manipulation should be divided into conscious and unconscious. We need to limit the problem to conscious market manipulation. Because unconscious market manipulation is so common. All the bull markets and bear markets you see. It's God manipulating the market. And it's prevalent from the tulip incident in the Netherlands hundreds of years ago to now. This is a very important division. There are three main forms of intentional manipulation: creating chaos, violating rules to gain an advantage, and maliciously exploiting market loopholes. Form 1. Creating chaos. Like Zhang Ming's case, GameStop's stock performance is actually making profits by creating chaos. In the beginning, just people with the same interest in exchanging information gathered together on a discussion board on Reddit. As the discussion board prospered, some of its members consciously developed concerted action groups. Then look for some structurally fragile stocks, such as GameStop. Buy enough stocks at low prices. Next comes the process of manipulation. They manipulated public opinion, published inflammatory remarks on discussion boards, invented an imaginary enemy, Wall Street, and threatened to confront it. Retail investors versus Wall Street. Articles from the community were shared on various social platforms and reported by significant media. More and more people are visiting discussion boards. Very effective. The increased attention translated into buying enthusiasm, which boosted prices, and as a result, prices skyrocketed. Later, someone even made a documentary specifically about it. The concerted action group sold the stock at a high price, and even if it fell, they would not lose money. Because they can do it again at any time. Sure enough, after 2 years, it was repeated again last week. GameStop itself has no characteristics as a local company listed in the United States. There are many similar stocks. Once they are targeted by internet celebrities, they can easily be manipulated under certain conditions. The same was true for the conglomerate craze of the 1970s. And you can see a different explanation in George Soros's The Alchemy of Finance. Form 2. Violating regulations to gain advantage. The first situation is information obtained in violation of regulations, which is insider trading. A typical example is the insider trading case of hedge funds SEC Capital more than 10 years ago. Colluding with company insiders in order to obtain important information about pharmaceutical companies in advance. The second situation is when staff take advantage of their positions to manipulate the market, such as senior company officials or employees of regulatory agencies, or even government officials. The third scenario is to use one's scale advantage to manipulate the market. For example, raising rates or entry barriers. Monopolies control the market by raising fees, raising entry barriers, etc. You can see various cases everywhere in the Fortune 500. Of course, most of them will not be sanctioned because they have a strong enough legal team. Another example is price dumping. In order to destroy their opponents, industrial powers flooded the world with low-priced goods, destroying the entire market. Another example is price intervention, mainly to eliminate those who disagree with one's own stance. Just like what the Bank of Japan or the Bank of China does to foreign exchange investors. Form 3. Malicious exploitation of market loopholes. High-frequency trading cases from decades ago fell into this form. High-frequency trading exploits loopholes in the market mechanism to bully prices on all other investors. When you want to buy the stock at $100, the sell order disappears and the stock immediately rises to 100.02. You increase the buy order to the current price, and the price immediately rises by 100.04. In the end, you can only close the deal at a price that is slightly higher than your original intention. Being bullied. Likewise, you face the same situation when you sell. As always, market prices are playing hide and seek with you. This happens to everyone. High-frequency traders bully us all. Just like scalpers selling concert tickets at high prices. It is obvious that all the cases listed above have something in common. They were intentional and caused harm to others. There are some cases of mixed forms, but most of them were not sanctioned. I use a table to list the process and results of the case. We can see that even clearly conscious market manipulation is immune to lawsuits due to various factors. Apart from expressing regret over this, what can be done to prevent the market from being manipulated? It's almost impossible to avoid it, I would say. But what we can do is prevent ourselves from falling into the trap of the market. Next, I will talk about some related principles and coping skills. Simply put, the principle of arbitrage trading. Inter-market arbitrage, intertemporal arbitrage, etc. It is a process of divergence or convergence in trading. To understand these in depth, it may take a certain length of time. If I have the opportunity, I will make a video to explain it. In short, first remember the two words divergence and convergence. The manipulation process requires some tricks. Manipulation is simply changing the behavior of other people through influence. Regarding how to influence others, the late Taiwanese scholar Liao summarized it as follows. How to influence others. 1. To move with emotion. 2. Explain with reason. 3. Know the meaning of justice. 4. To threaten someone with power. 5. To respond with force, violence, beating, scolding. 6. Lure them with sex. 7. Encircle the crowd. Mobilize the crowd to surround. 8. Exposing it for political purposes, revealing privacy and dark history. Liao. These behaviors are ubiquitous, ranging from small individuals to all human societies, from ancient times to the present. It's just that most of the time they are presented in an unconscious manner. Some manipulations have become mainstream in financial markets. Nowadays, high-frequency trading has become the standard configuration of all large financial institutions, so I can only accept the reality of being bullied by high-frequency traders. Beyond that, I have some experience dealing with it. Tips. Action list and negative list. Investment structure table. Transaction file. Take me personally as an example. Action list and negative list means you can do something, avoid doing something. I will make a list of some types of products that can be traded based on my own preferences and abilities, such as those with poor liquidity or fragile market conditions, small varieties. Investment structure table. Awareness is a requirement that must be strictly followed in my investment process. I will add matching constraints, focus, and how to handle unexpected events based on different needs. For example, set the time limit, set the maximum, minimum holding amount, and set the parameters of stop profit and stop loss ideographic period. Transaction file records my investment process ideographic period. Before investing, write an application to tell your future self why you want to do this. Keep an operation log during the investment process to assess whether you have violated regulations. Write a self-critical evaluation after the transaction is completed. Eventually they will form archives. Then submit it to another self as a how-to guide. I've been doing this for many years. I read more in order to write reports, which resulted in better perception. I performed many tasks rigorously, and it strengthened my professionalism as a trader. Through self-criticism, I better connected myself with the market and raised my upper limit. Everything I do is to know what I'm doing and to do things with as little regret as possible. How to assess market manipulation. All I can say is that cases like this do more harm than good. There is no doubt that conscious market manipulation harms the interests of many people. Even if they provide liquidity to the market and make the market move faster. Just like someone bought it from scalpers at a high price to watch Taylor Swift's concert, saving time and energy. Each takes what he needs. However, they bullied everyone. It can only be explained metaphorically. They are bacteria in the market. They are parasitic in the market. As long as there is a market, they will be there. Looking back at these cases, we can see that a successful market manipulation requires the following elements. Multiple associated markets. Here you can build information advantages, use your integration, insights, spatial thinking, mathematical, critical thinking. Location advantages, such as platforms, positions, relationships. And scale advantages. Fragile structure. Significant results can be obtained at a lower cost in fragile structures. Manipulate public opinion and sell at low prices. Connector. Cash out the entire process via connectors. So even an investor with less than $100,000, when he does this, he can manipulate the market. This provides us with a valuable reference. In a market controlled by God, unconscious market manipulation provides us with a legitimate arena. Here, we can establish our own information advantages, location advantages, and scale advantages. We are constantly looking for fragile structures and fully understanding their structure. Then connect them. In financial markets, some people are so good at trading amid chaos that they become expert traders. Some people are good at predicting the future and they become predators of speculation. Some people are good at using the compound interest effect to create scale advantages, and eventually they become investment experts. Hope you can be one of them.